What's going on, everyone? Welcome back to another video. Today's video is going to be on how to catch sniper entries, how to catch these crazy RRs, with the minimized risk, with the maximized reward, how all these institutional traders are catching these crazy entries while, we're looking at the charts like, what the hell is this? Like 9 out of 10 times when I used to look at the charts, I used to be like, what the hell am I looking at? What the hell am I staring at? Like all these candles, what does it mean and stuff? So my major issue was entries, and today's video is going to be covering all those doubts, all those misconceptions, and all those confusion that you guys have with entries. So before I do show you guys this crazy GJ sell that I did catch, let me show you the before. As you can see, I was focusing on this 155-200 same level, and you can see it did play out. We'll get into the the technicals of how it ended up playing out, but yeah, I was focusing on either this one or this one over here. And this is not replay mode, right? This is in the past. You can see live chart, everything, this time right over here. So this is the live chart of the before analysis of this crazy GJ short. So let's get into this. Let's delete everything over here, and we're out of replay mode. Let's just look at GJ price action. Let's just look at all this right here. So someone might say, okay, yo, Track Effects, you always say that don't sell in a uptrend, don't buy in a downtrend, shit like that. Well, there's certain concepts and certain rules that you have to follow that play in those types of favors. So for example, GJ, we see a major impulsive move up right here, and then another major impulsive move up, and then we're followed by a bunch of manipulation right over here. What does this manipulation tell us institutional traders? Well, to an institutional trader, this is clear as day. It's liquidity that rests below. We all can see that there's a bunch of money resting below over here. It's not the cleanest, you can draw it up to here, but just for visual purposes, I'm going to leave it here. But there's a bunch of money over here that the market needs to take out. And we all know liquidity is the main thing that helps us understand where price is going to be going next. Now, we also know where price is going to be going next by understanding imbalances, aka IPA, right? So right over here, we have a clean IPA right here, and then we also have clean insufficient price action right over here. Now, obviously, it did just ended up getting cleared, but this is before price did end up clearing it. So just by these two, concepts, this tells us why price needs to come back down. It gives us a reason why price needs to come back down. Because one, it needs to take out liquidity. Two, there's a bunch of imbalance. There's an imbalance over here, and there's an imbalance over here. And for the people that don't already know this, liquidity is a lot more stronger than imbalance. So if there is liquidity below over here, and we have imbalance over here, and we do see this clean institutional candle, this doesn't necessarily mean that we buy right away. Rather, we're targeting wherever the stops are. That's how we're trading as institutions, or not institutions, but retail traders trying to mimic institutions. So we see this major move up, and we see this major move up, and there's manipulation. We know that long term price is gonna have to somehow make its way back down to like this area at least, because one, there's money over here, and then two, there's imbalance, right? And then we also have this nice reaccumulation. We'll get into that later on. But so let me get into how I caught this trade. So let's break it down simple as possible. We know that we're looking for sells now because price needs to go to the liquidity. If we know price is way too overextended, it can't continue going up and up and up because obviously there's liquidity here. It means that there's a good opportunity for us to get in for shorts. Now, at this point, just looking at this major move up, there's no structure. It's really big. There's a lot of momentum, but we don't necessarily see that, that clean manipulation structure that we'd be expecting. All we see is a major move up like this. And with that little bit of information, we don't have much to, understand or deal with. So let's understand this price action over here. So now we know price has to make a drop down up to this point over here because there is a bunch of manipulation and stop losses resting over here. We know that we need to find valuable levels for actually taking sells. So first things first, let's analyze the past to analyze the future. Right, so for the past was here. There's a clean institutional candle right over here. Price went into it once, tested it, came back to retest it after microstructure did switch from bullish to bearish, and then price ended up making its move down. Now, when it did make its move down, what do we have? We have this little previous low get taken out. So this low did end up just getting taken out right here. So I'll put this as my COS, continuation. Just remove that, make it a little cleaner, but boom. So we see that this low did end up taken out. Now, once we do see that low get taken out, what we can see is that the structure is slowly moving from bullish to bearish. We're creating these lower lows, lower highs. right here. Now obviously the overall trend of the market is still bullish, right? In order for us to become bearish, we'd have to break past significant macro structure, which we could find on the daily, right? Maybe something like this over here, but you know, in this case we're not focusing on that. Let's stick to entries. So we know that overall we did end up, you know, continuing that prolonged down move, and price is too overextended to go up. So at this point, how am I going to find my points of interest? Well, I was on the 15-minute time frame, and all I was really doing was I was looking at possible institutional candles that were the cause of this prolonged down move that broke this little bit of structure over here. So for example, this is the start of that move down, right? This is the start of that major move down. Now what's interesting about this major move down is it broke structure right here, right? Rather gave us that continuation of structure, created a new low, right? And all we're doing now is we're looking for those major points in the market where the market either pulled back and created a institutional candle, or the market just, you know, has an institutional candle at the start of the major move down. So in this case, I was focusing on this institutional candle right here. Now let me show you the previous. As you can see, 155 200 right over here. I think I'm on the, yeah, sorry, I was on the 1 hour, not the 15-minute, my apologies. So we're on the 1 hour, and I was looking at 155 200, which was right over here, right? And the second area of focus I was looking at was this institutional candle right here, right? And you can take this by the entire of the body of the wick. So we had two potential areas that price could come back into, and then from there do its thing. Now what's interesting about this move right here is that, well, like I said, it did give us that continuation of structure, but this is also where price ended up pulling back and then continuing down. And this is that major move, that major up candle before the move down that price printed before she giving us that continuation of structure. So at this point, all we would really be waiting for is price to come back either into this level of interest or this level of interest. And I did show you guys already the before. This is the before, so I don't want to hear anyone saying in the group chats, or, you know, sorry about my phone, but I don't hear anyone screaming at me saying, oh, this is replay mode, you don't actually do this live. I'll show you guys the trade as well. I'm in this live. It'll, you know, the screenshot should pop up somewhere on your screen right now, but yeah. So let's play this out. So the market comes back up, slowly makes its way back up. Now you can see the move back up is really slow. It didn't just randomly shoot up just like that. It's really choppy. It took time. Now we're in replay mode, so this is really fast for you guys, but imagine sitting on the charts waiting for all of this to occur. 1 2 3 4 5 6. This is like over 15 candles, if my math is correct. I'm pretty bad at it, but this is over about like 15 candles, which is a long time, right? That's 15 hours. That's almost a whole, you know, daylight of 12 hours that you just spent looking at the charts. And this is where your psychology is tested. You know, people say, oh, psychology is bullshit, but in my opinion, it's not bullshit at all. You have to have that proper patience and discipline. Stick to your analysis. If you keep looking to catch every single move up and every single move down, you're more or less going to be ending up losing money rather than making money. Remember, the market maker and the institutions, they're not getting in the market every second. They're not trading this, you know, they're not buying here, they're not selling over here. They're buying and selling at specific points in the market. That means that they're waiting for the best opportunities to get in. So if the market maker is doing that, why aren't we doing that? You know, we have to stick to what the market maker is doing. And in this case, we aren't doing that. I know a lot of people that are buying and selling over here. Stick to your analysis and just follow your set of rules. So let's play this out, play more candles. And one thing that we can notice is that price did make its way back down. And someone might say, okay, we broke structure, but did we really break structure? No, we didn't. As you can see, in order for this to be a break of structure, the candle itself needs to close below the wick, and it hasn't done that. So what this tells us is that price just generated a double bottom and more liquidity for the long term. So really all we're doing is we're just creating more liquidity for when price does end up selling off, it has somewhere to go and has an actual take profit target. Now you can also kind of say that we did generate a lot of liquidity over here, where our point of interest is right above, so that does increase the probability of our point of interest playing out. So let's play this out a little bit more and let's see what the market does as it makes its way into our point of interest. Now price comes in. Now this is why I say you wait for the confirmation, because if you did enter right away with a limit, you would have gotten stopped out. Look at that, 7 pip stop loss, you would have gotten stopped out, TP at the next low, and you can see that, you know, what ends up happening is the market falls. So what we're going to be doing now is we're going to be looking for confirmation inside of our POI, and this is how we're going to be catching that sniper entry. So let's play this out, play one candle, and boom. Once price is in my POI, we're going to drop down to the 5-minute time frame. Now let's look at what price ends up doing, and price falls down. Let's go down to the 1 minute to get a better look. Now look at all this information right here. What does this information really tell you, right? Because this is all this story, all these prices, they're telling us a story. You know, every single candle, it has an objective and it has a reason. There's cause and there's effect. We have to understand what this is doing. What is this, you know, 1, 2, 3, and then market slows up. Why is it doing that? What is this liquidity? You know, what is all this doing? Why did the market end up pulling back? There's reasons for everything that we have to slowly understand. So first things first, let's look at the structure. Overall structure was pretty bullish, right? We were seeing bullish structure, but we want to see price go down. If we want to see price go down, but the overall structure on the 1 minute is going up, then that means we don't take the trade. We need to wait for price to actually go down, break structure on the 1 minute, and then we can take that sell. So what do we see over here? What I'm seeing is Wyckoff. Now I'm not going to make this confusing. I'm going to keep this simple as possible. Let me actually open up a Wyckoff distribution, and boom, let's look at this. We have our PSY, BC, AR. Let's look at our PSY, BC, AR. How do I know where's my PSY? Well, just looking at this little bit of information, it's impossible for me to know. I can't know if this is my PSY. I know so many gurus out here saying, okay, this is the PSY, this is the BC. You don't know if it's the BC or PSY for sure. You have to wait for the candles to do its thing. So at this point, I'm waiting for the candles to do its thing. And then from here, I can slowly get an idea of if this is my PSY or not. Now let's look at this. PSY is that last pullback before a major move up and then a major sell move down. Let's look at this. Last pullback, major move up, major sell move down. Makes sense. So this is my PSY. So right over here, this is my PSY. And after my PSY, if I identified my PSY, I also identified my BC, which is my buyer's climax. We have our buyer's climax. Now, do we have an automatic rally? Yes, we do. It pushes back down. It has an automatic reaction towards the downside, coming back over here. All I'm doing is I'm looking at this schematic and I'm trying to print whatever I see onto the charts. Now, am I followed with a secondary test? Now, this is controversial. Someone might say, okay, this is your ST. I don't really see a clean secondary test, because for a secondary test to be clean, what I usually want to see is price do this, right? I want to see price do that. In this case, we don't have that. What we have is price do this and then that. So we don't really have a secondary test. So what we do have is the candles closed above the buyer's climax. And if we're looking at Wyckoff distribution, we can see that if the candle closes above the buyer's climax, that's considered as your upper thrust. So let's take a look and let's focus right here. This is my upper thrust because the candle itself closed above my buyer's climax. Now remember, the structure is still up. And if we're looking at Wyckoff in the terms of phases, phase A isn't telling you to get in. All phase A is telling you is that these are clues of the market reversing. That's it. It's just clues. So we still need more confirmation. We don't have nothing yet. So play a few more candles. The market does its thing, and then boom, we see the next candle closes above and breaks above the previous high, giving us a upper thrust after distribution, which is your UTAD. Now look at this. The upper thrust after distribution breaks above the previous UT with the candle. As you can see, we have that. If you want to look at the line chart, it's so much cleaner. But yeah. So we'll go back to the candles, and yeah. So we have our upper thrust after distribution. Now we're in the last couple of phases. We're in phase C, and this is when we're possibly going to be looking for entries. Now there's two possible ways you can catch an entry. You can either re-enter off of the upper thrust after distribution. So if there is an institutional candle with the UT, you can re-enter there, and that'll be considered as the UTAD test. Now for me, I don't do that. There's not enough confirmation there, but you can see that you know, price comes back. I'm pretty sure, yeah, price comes back to retest this institutional candle to the pip. So it comes back to retest the UTAD. You get your entry filled. Stop loss would have been the high for 3 pips. I didn't catch this. I'm gonna be real, I didn't catch this one. I caught a different entry. But that's another way of entering, and we can say that, all right, this is our UTAD test. So right here, I'm gonna say this is my UTAD test. Now I'm still not interested in entering, and let me tell you why. What is the trend? The trend is still moving bullish. We haven't seen any proper lower time frame breaks of structure, right? We haven't seen that. So what we need to see is that prolonged down move breaking structure, which will give us more confirmation on why we need to get in for the trade. Now, Wyckoff isn't telling you to buy or sell at UT, sell over here. No, all it's telling you is that the potential schematic of whatever happenings on the chart can give you that idea that price is going to end up reversing. So let's see what the market ends up doing. right? So someone might say, is this your break of structure? No, this is not your break of structure. I'm not going to get into it. I already did it in a bunch of other videos, but the people in the membership already know this now. But let's play this out. And there we go. Now we have a really clean break of structure. Price ends up giving us that clean BOS towards the downside, which broke above a previous higher low. So we break below that previous higher low, giving us that proper break of structure. At this point, I was on the 5-minute time frame, and I'm looking for that last institutional candle that was responsible for that break of structure. So right over here, that would mean that I was focusing on this 5-minute institutional candle right here. Now, what's interesting about this is not only that this is my institutional candle before the major move down, but this is also the LPSY. Now, the LPSY is basically that last point of support, or last point of supply, I think. I'm not even too sure myself, but it's that last point of supply where the market pulls back and then goes down. And what the Wyckoff schematic doesn't tell you is that the LPSY is actually going to get tested. So really what it's going to look like is something like this. When the market does create that last point of supply, let's say this is my LPSY, what you're going to see is price consolidate and come back into that last point of supply, and then price is going to get in, and that's where you're getting your entry in. So that's generally what Wyckoff doesn't show you, but yeah. So we have our entry right over here. We're focusing on this last point of supply because this is that last pullback in the market before that major BOS. So I'm going to write down right here, LPSY. Now this is where I would be setting limits. At this point, I did set a limit right over here at the open of this 5-minute institutional candle with a stop loss at the high of the institutional candle for 3 pips. Let me just, there we go, 3 pips. Now take profit. Where are we going for take profits? Like I said, take profit, we're targeting the next level of liquidity. In this case, this is that next level of liquidity for 66 pips. Now, if you are a little bit more crazy like me, you could target long term, because I'm more of a long term type of guy. That's just my personality. You could target the long-term low, which is going to be over here, because that's where we want to see price, stop out all those people. So from here, let's go down to the 5-minute time frame, and let's see if price taps us in. Now, from here, we get that sniper entry. Now, think about it. Everyone's confused on how you're catching these wick entries. How are you doing this? How are you doing that? It's because we're waiting for that confirmation. We're not just entering randomly because price entered our POI. We're not looking at these volume bullshit indicators. We're not looking at, the divergence. Maybe that does work for some people. No hate on the people it does work on. For me, it doesn't work. But we're not looking for these different types of, random entries. We're looking at price action, and that's it. That's literally it. Now, price does tap us in, stop loss is at the high, and then automatically we see price go down. Right now, from here, price does its thing. It just completely falls. Now, TP1 would have gotten hit right here for about like 66 pips if we did target there. For the sake of the video, let's just keep it right here. I'm still holding this, as you guys can see. I posted the picture of my entry right on the chart, or on the video rather. But yeah, you can see that's how you catch those 22 to 1s. As you can, this was a crazy 22 to 1 risk to reward ratio, and if we end up playing this out even more, you can see it ended up falling. Now this isn't random. Price didn't randomly decide to use this level. Price didn't randomly decide to use this level. Everything is calculated, everything has a reason, everything has an objective. You have to be thinking in terms of objectiveness and logical. Why did price come over here? Well, because this is that last move down on the higher time frames. We have an institutional candle here and an institutional candle here. Price needs to tap into that institutional candle because that's where the banks are getting involved and getting out of the market. If we know that the banks are getting involved over here, then that's our key. That's our clue to get involved as well. Now, we simply stick with structure. That's it. Now, for the people that hate Wyckoff, let's look at this. Overall, all Wyckoff is, it's a schematic that tells you that the structure is shifting. If you were to completely ignore all this UTAD, BC, PSY, let's just go like this, right? Let's delete everything here. This is basically what Wyckoff is. That's literally it. That's it. If I labeled it like this, it's easy for everyone to understand. Break of structure, retest, continuation. That's all Wyckoff is. You can see, but we have these little crazy names for it that you do have to study and backtest. It does take some time, but it's generally really simple, and that's how you caught this, or that's how I caught this really nice 22 to 1. Now, I also had another trade I did send out to the Track Effects group chat in the private Discord. If anyone is interested in getting in the course, all you have to do is click the link in my bio or in my description. It's on Instagram and YouTube. Buy the course and you get added to this group chat on Discord with people, and I send my analysis and everything here. But as you can see, I sent my this is my, trade right here, my setup. I said I was looking to buy over here for USD JPY. I'll be taking you guys through this right now. Let's go straight to USD JPY right here. Delete this. Let's go down to the 5-minute time frame. Now, let me actually delete all this. Let's actually delete everything. Screw it. So USD JPY. Let's look at the 1 hour time frame. Now, USD JPY on the 1 hour time frame, it's bullish. We can all see that price is overall bullish. We had this area where price created some liquidity, these equal lows. We know that the market would have to end up taking it out. Now, when it did end up taking it out, shout out to one of my students in the group chat. They actually showed me this level. I didn't, see this myself. But there was this really clean institutional candle right over here. Now, after price taps into our institutional candle, what are we expecting? What are we expecting? Do we enter right away? You can enter right away, but you won't have the confirmation. Now, what's interesting is this move swept liquidity. Now, for the people that did buy the course, you guys know that this is a great confirmation for why price needs to go up. But yeah, so once price comes into our point of interest on the 5-minute time frame, look at what I did. I looked for that break of structure, and this is actually on the 15-minute, my apologies. So I looked for that break of structure, and we don't have a break of structure quite yet, but right now we'd be waiting for it. Now right here, let me go back to the thing. So this was on the 15-minute time frame, USD JPY, break of structure. Now right here, what we see is price ends up breaking structure of this previous higher lower high. We do see this lower low lower high move formation right here, and then price consolidates and breaks structure. Now this tells me that my POI was overall correct. It tells me that my POI was correct because it ended up reversing after it tapped into it. So from here we do see that break of structure. I also sent this to the free Telegram group chat, but sadly I told them to remove the limit because I was a little bit wary on price missing out. But anyways, price does its thing, break structure. Now I'm focusing on that institutional candle that was responsible for that break of structure. Now look at this. Once again, we cleared liquidity right here. Price ends up taking out a bunch of stop losses below. We hit those stop losses, market grabs it with this move right here, and then price moves up and breaks structure. Now we're focusing on the institutional candle. That was the cause that major impulsive move up, and in this case it would be this institutional candle right here. Now you can see this is my exact entry, 109235. 109235 was actually better. It was way better. So right here, this is my exact entry, and my stop loss is 109198. So let's put a stop loss there, 109198. Boom, stop loss just at the low of the wick. Now someone might say, okay, how'd you do that? Well, I refined to the 3-minute POI. From here I set my limit. The limit was set right over here at the open of the institutional candle. Stop loss just at the low, and we're not accounting for spread. If I were accounting for spread, it would be different. But yeah, now take profit wise. Let's see where our TP was. Our TP was 109,640. So let's mark this up, 109,640. 640, and boom. So take profit was just about 40 pips. Stop loss 3 pips. Overall 10 to 1, which is great, crazy and great. Let's see what the market does. It does end up pushing up a bit, right? It does end up pushing up a bit. But think about this. If I entered right away, right over here, right, with my entry, and I didn't look for confirmation, and then I see price slowly come back down, I'm going to be psychologically and really emotional. I'm going to be thinking about closing because I'll be like, okay, what if price ends up taking out the liquidity over here and stops me out? Because I waited for that confirmation, I'm not going through the stress and emotion of price pulling back. Rather, I want to see that pullback so we catch that crazy trade analysis or that trade sniper entry. Let's play this out. Let's see what the market does. Let's actually go down to the 15-minute. A little bit too lazy. And boom, this is where my psychology was tested a lot. Price missed my entry right here. Now from here, I told everyone in the free Telegram group chat, remove the limit. Price ended up testing this institutional candle instead of the 3-minute, and I told everyone to close the limit. Sadly, people did miss out on this, so did I. But some of the people in the Discord group chat did catch this. Let's play this out. And as you can see, clean as day, the market taps into our 3-minute point of interest and automatically pushes up. And how long was this? 15, 30. Like this was about 2 hours, and the market completely just smacks our take profit and does this thing. And as you can see, we did call this in the Discord community. If anyone is interested, and once again, go back to the description and you'll find it. Now we also had another trade set up for gold. I'll show you that right now. XAU USD. right over here. So I was focusing on the 6-hour point of interest for gold, right? We're looking at this area right here because the market did end up breaking structure. So rather I was thinking, okay, once price comes into my point of interest, I'll be thinking about selling, but I'm not going to sell right away. Now we know why I'm not selling right away, because one, my risk to reward is going to be not as good. I'm risking 60 pips to make 400 pips, which is still good, a 6-to-1, but I don't want to risk that much pips on my account. So what I did is, when price did come into my point of interest, I went down to the 1 minute time frame and I started analyzing the structure. Right here we see low, higher high, higher low, higher high, and the market ends up selling off, breaking structure. So we have that break of structure, identifying that overall price is now in a bearish overall trend on the smaller time frame. And if the smaller time frame is bearish, then that means that the higher time frame is also potentially bearish now. So we set limits at both of our levels, which was, one was on the 5 minute, I think, right over here at this institutional candle. And then the next one was on the 3 minute, was it? Yeah, the next one was on the 3 minute. I did refine it up to here. Boom. And the next one was on the 3 minute time frame. Now, we had limits right here. Now, as you can see, price ended up, this hurt hard. This one hurt. Price ended up, obviously breaking through this one. But the second one, it tapped us into the pit perfectly. Now, as soon as it tapped us in, the market moved above our stop loss for about like 6 pips, 7 pips, and then the market ended up selling off and ended up moving over like, I think 400, 300 pips. Sorry, 200 pips, not 300. Ended up moving 250 pips, and this would have been a crazy 39-to-1. Sadly, I did miss out on this. The market did end up stopping us out, so we did not capitalize on this trade. But overall, I want you guys to see how I'm catching these sniper entries. I showed you the before, I showed you the after. I'm showing you guys proof that I can really do this. Now, for the people that are saying, okay, I want you guys to do a live trade analysis, like, show what ICT does, go on the 1 minute time frame and do what ICT is doing. Call out levels like him. I'm going to keep it real. I'm a long-term swing trader. If I'm going to make a video about doing a live trade, I can't do a live trade on the 4-hour time frame, because in this case it took about 3 days, 4 days for the price to even come into my point of interest, right? And that would be really hectic to be recording 4 days worth of every single candle, which doesn't make sense. Rather, what I like to do is I show you the before, I show you the after. For example, on my YouTube you can see Euro CHF. I did make a video on Euro CHF, and as you can see, it did end up doing what we said. It tapped into the area of interest and sold off. Now, the first one did end up getting stopped out, which is completely fine, but overall, I am showing you guys proof, the before and the after. And if there is any questions on entries, schematics, anything, leave it in the comments below. I'm here to answer your questions. I'm here at your service. Anything you guys need, let me know. Anyways, thank you guys so much for watching. I hope this video was valuable, and if you guys have any questions, like I said, leave it in the comment below. Make sure you follow me on Instagram. I'm doing course giveaways every now and then, course discounts. I'm posting a lot of valuable content on Instagram about psychology, all that stuff. Thank you guys so much for watching. Leave a like, make sure you subscribe, and I'll see you guys in the next one. Thank you.